What's going on, YouTube Nation? This is Stark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. So I am back doing videos. We did a little bit of traveling, vacation, and I'm at the location that I started building a dividend portfolio. I'm actually in Myrtle Beach with family, and in 2019, I had a vision to create a dividend portfolio, to create my own retirement pension. So here I am. I'm back, and guess what? I have $929.60 coming in. Now, when I built this dividend portfolio, I've evolved over time. I created a dividend portfolio that's high yield, has good dividend growth, and has really good ETFs and options income ETFs. So the evolution of my dividend portfolio has changed, especially with new holdings that come in, new companies that start developing ETFs that are good for taxes and as well as dividend growth. So, I'm just dissecting and picking apart and helping build a dividend portfolio. But there are some good high-yield dividend stocks that will be implemented in my dividend portfolio shortly. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. Smash that like button. Let's check out these high-yield dividend stocks right now. So one of the dividend stocks that will be added to my dividend portfolio was Verizon Communications, or VZ stock. Now, the dividend growth isn't the best, but with this dividend growth stock, it has a high yield. So because of the high yield, I get really good distributions from Verizon. Now, the earnings report was not bad. It was up 2.59%, and it did beat its revenue expectations of 2.35% in the second quarter of 2025. So the year-over-year revenue was up 2.85%, which is $34.44 billion. Okay? So that's a good sign. So good revenue. And again, Verizon emphasizes, their board of directors, and they really emphasize the dividend safety, and for investors that love high yield dividend investing. So I'm going to jump to the trends of its dividend history, and I'm going to use stockanalysis.com as an example. So looking at the trends of the dividend distribution, which is quarterly, it was at 64 cents 2021 to 2022. 2023, 2024, it was 65, 66 cents. 2024, 2025, it was 67 cents. And then in 2025, 2026, it reached 69 cents to 70 cents. So you have a dividend growth of 3.14%. That's nothing special. But again, it's high yield. The dividend growth in the number of years is 21, which is good. It's a 6.24% dividend yield. So in the payout ratio, 68.5%. That's not too bad. But again, that is high. So don't expect a lot of dividend growth with Verizon, but it has that nice high yield that will be implemented in my dividend portfolio. So I'm going to jump to the next dividend stock. This one also came to my attention, Pfizer. So at one point, Pfizer generated a lot of revenue from its vaccine, and now it's down for a pretty good buying opportunity at $25.21. So they're a huge pharmaceutical company, and this one appears to have a pretty good bang for its buck, being $25.21. Now, I did a little bit of digging as well with the dividend safety, and I'm going to go over that with you guys. So I did a little bit of AI to make life easier for me and you guys. So Yahoo Finance was linked to this, and Pfizer's dividend is generally considered safe, offering an attractive forward yield over 6%. While earnings-based payouts ratios are high, free cash flow remains sufficient to cover the dividend. Management has reaffirmed a strong commitment to maintaining and all over time growing the dividend payment. So here's a few notes. The cash flow coverage, its free cash flow generation successfully covers its dividend payouts, though it lacks a massive buffer. So the other thing, the management, the CEO, Albert Bourla, has continuously referred the dividend as a priority, intending to maintain and grow the program over time. So it has raised its dividend over 15 consecutive years and maintained a streak of quarterly declarations dating back to over 3 decades. So we have some nice bullet points right there. And also the revenue is pretty strong as well with the trends. And I'm going to jump to the dividend history. A few good things with the trends. So 2021, 39 cents. And again, it's quarterly. 2022, 40 cents. 2023, 41 cents. And then you see 42 cents and 43. The trends are a little bit slow with the dividend growth. The one thing I want to also mention, it looks like the dividend payout ratio is 131% based on trailing 12-month GAAP earnings. However, based on forward-looking non-GAAP earnings, which include a one-time asset impairment charge, the payout ratio is more sustainable from 56 to 59%. So that's one thing that's really nice. And again, the annualized dividend is $1.72 per share, which equates to a dividend yield of roughly 6.4% to 6.8%. So right here, the non-GAAP metric gives a clear picture on how the company covers its dividend with operational profits. So just be aware of that. Per Yahoo Finance, I use them as a beautiful reference, and AI is very helpful with finding trends or information. So take advantage of AI when you're doing your due diligence into buying certain stocks. Don't use me, use other sources, and especially a financial advisor. And the next one I'm going to go over is a real estate investment trust, which is VICI Properties, sitting at 2628. Now, I've taken Latin. It drives me nuts saying VICI. In the Latin terms, it's YieldMax Properties. So I would say WICI. So you'll notice me saying that because I'm going to say it in Latin. So this is a real estate investment trust. This is very unique, and it is for experiential purposes. So basically for almost entertainment or how people want to enjoy the experience. So I'm going to go to its portfolio if you're new to my channel, because I have posted numerous videos on VICI Properties. Simplify this, it's an S&P 500 experiential real estate investment trust. So the first thing I want to say is I like being well diversified in real estate investment trusts, especially experiential REITs. So they're focused on owning, acquiring, and developing gaming, hospitality, entertainment, and leisure destinations across the US and Canada. It owns iconic destinations including Caesars Palace, MGM Grand, and the Venetian Resort in Vegas. It features 93 experiential assets, 54 gaming, 39 non-gaming, encompassing 127 million square feet or 60,300 hotel rooms and over 500 restaurants and bars. Expanding beyond the gaming through partnerships with entities like Canyon Ranch, Great Wolf Resorts, Kalahari Resorts, and Cabot. So again, this is a unique real estate investment trust, and since they own this, certain buildings and stuff, they get paid in rent. So that's one thing that's very important. So I've kind of switched things up with my YouTube channel a little bit. I used to go to websites and stuff, their websites for resorts or resources, and go over their resorts and da-da-da-da. That takes up time. So I'm trying to simplify it a lot faster doing AI for you guys. So I'm going to show you my rationales and my defense of why I'm buying certain things. Of course, this is for entertainment purposes only. So we have this. Now, the important thing is, remember, 90% plus of what they make have to go back to investors. Is the revenue there? That's what we need to look at as well. So the important thing with real estate investment trust are revenue, of course, and FFO, AFFO, okay? So the first quarter in 2026, the revenues and FFO highlight continued revenue growth compared to $984.2 million in the first quarter of 2025, driven by durability of their triple net lease portfolio and expansion in real estate financing. So the AFFO, The standard cash flow metric for REITs, remember that, stood at $650.9 million for the quarter, or 61 cents per share, which represents an increase of 5.7% year over year. So for the full year of 2026, analysts project VICI to achieve roughly $4.18 billion in revenue and FFO of about 2.95 per share. So I use simply Wall Street, VICI Properties, and Seeking Alpha as references. So another thing is their dividend history, which I'll jump to on stock analysis. We'll start in 2021, 33 cents to 36 cents, 2022, 39 cents to 41 cents, in 2024, 41 cents to 43 cents, then in 2025, 45 cents to 43 cents to 45 cents. So again, that is a pretty nice increase. And the dividend yield is 6.85%. The dividend growth is 4.05%. So there is some growth in 7 years. So these are 3 dividend stocks, and one is a REIT that I will be buying to my dividend portfolio. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. I will have a video for you tomorrow. And again, I have a disclaimer in the beginning of the video. Don't use this YouTube channel for financial advice or for tax advice. Take care. Happy Father's Day. Happy Sunday Fun Day.